ServiceNow stock has crashed more than 60% and dropped 17% in one day this week. But if you look at the business, if you look at the numbers, they're not as bad as the chart actually looks. They actually beat on EPS and beat on revenue. The renewal rate was 97%, but 97% is still really high for a software company like ServiceNow. Investors want to know if this stock is a buy now. I'll answer that question in this video, give you my thoughts on the business and the valuation. But here's where it gets really interesting. Almost every company in AI relies on ServiceNow. The CEO and the management team clearly believe the stock is undervalued because they repurchased about 20 million shares. And they even announced an additional $5 billion buyback program, so they clearly believe it's undervalued. And I have one massive reason why this stock is about to see next level growth. So if that sounds interesting, then remember to like and subscribe and leave a comment. So let's get straight into it with a quick overview of the company. First of all, what is ServiceNow and what do they do? Now is a cloud computing company that builds enterprise software to manage digital workflows and automate business processes. It's designed to replace manual work and legacy systems with cloud-based, service-oriented applications that support IT operations and all other enterprise functions. Think of every large company as a massive machine with hundreds of moving parts. IT teams, HR departments, customer service reps, finance teams, and other departments. The problem, they're all using different systems that don't talk to each other. Employees waste hours chasing approvals, logging tickets, or waiting on emails. That's where ServiceNow comes into it. ServiceNow is the AI-powered workflow automation platform. In plain English, it connects all these disconnected systems and automates the repetitive processes that slow businesses down. For example, an IT system goes down. ServiceNow routes the ticket, escalates it, and tracks the fix automatically. Their core product is called Now Platform, and it covers three main areas: IT service management, HR service delivery, and customer service operations. Basically, any department that handles requests, approvals, or cases, ServiceNow has a product for it. And their customers, these aren't small businesses. We're talking about roughly 85% of the Fortune 500. Banks, hospitals, governments, manufacturers. If it's a large enterprise, there's a good chance ServiceNow is running behind the scenes. Companies choose them for one reason above all else, and that's efficiency. Fewer manual processes means lower costs, faster response times, and less room for human error. So that's the business. They have strong products, massive global customers, and a massive market. Now let's look at what the charts tell us. Okay, so pulling up the chart to see what's going on with ServiceNow stock. First of all, we can see that huge drop that Now stock has had in 2026. After reaching a new all-time high around $240 in January, Now stock has gone into freefall. We're talking about a 66% drop in just 3 months. This is the sort of move that is not expected of such a company. Now has around 30,000 employees and has had about $150 billion wiped off its valuation in 3 months. Yes, $150 billion. But importantly, Now stock has dropped back to a level that we've only seen twice in the past 6 years. After crossing the $90 mark in June 2020, Now stock has generally traded a lot higher than today's price. This level was a key support level in 2021, where the stock rallied 60% before the bear market of 2022. Then again in 2023, this was the beginning of the stock's rally to an all-time high. Now, everyone has different methods of risk management when it comes to buying stocks that are falling like this one. A lot of people will say don't try to catch a falling knife, and that's 100% true. But how do we balance between not catching the falling knife and buying the dip opportunities? Because after all, we don't want to buy at all-time highs. We do want to buy when there's value. Well, one way is to always be looking at the PE ratios and the earnings growth, which I'll talk about in a moment. But a very simple indicator that I like to use a lot is to calculate if I bought this stock the first time it crossed today's price, how much time since then would I have been in the green or in the red? For me, this is usually basically just looking at the price and comparing it with its averages. Now stock first passed $90 back in 2020. And other than the end of the bear market 3 years ago, this stock has never actually dropped below this level. For me, this screams buying opportunity because I think this has been majorly oversold. But what do you think? Drop a comment and let me know. Do you think that now is oversold or is this drop justified? Another thing that we should be taking notice of is Wall Street analysts. So what do analysts think of ServiceNow stock? Looking at MarketBeat, we can see that 43 analysts are covering this stock right now. There is 36 buy ratings, 1 sell rating, and 6 hold ratings. Now stock does have a low price target of $85 and a high target of $240, which is amazing really that even the lowest target from 43 separate analysts is only a few dollars below the current price. But the consensus price of 146 is a massive 62% above the current price. And all these analyst targets are up to date, with most of them having been set in the past few days after now released their latest financial earnings. On April 22nd, ServiceNow reported their first quarter 2026 financial results, where they beat high end of guidance across all top line growth and profitability metrics, as well as raising full year subscription revenue guidance. And just look at all these metrics. Almost everything here is up 22% year over year. With Now Assist customers spending over $1 million in annual contract value that grew over 130% year over year. CEO Bill McDermott stated the first quarter performance beat the high end of our guidance once again. Since our founding, we've built our platform around the work customers need to accomplish. Today, they rely on ServiceNow to be their AI control tower for business reinvention. As new technologies create both opportunity and risk, our 2 decades of engineering combined with deep business context enable us to orchestrate and secure agentic enterprise. With this foundation, our AI growth is far exceeding even our own expectations, reinforcing our position as one of the fastest growing enterprise software companies ever. But instead of me going through this whole earnings release, let's listen to what the CEO himself said in an interview with Jim Cramer in the past couple of days.
Mr. McDermott, welcome back to Mad Money.
Jim, it's great to be back with you. How you been?
I have been fine, thank you. How about you?
I've been great. Another beat and raised quarter, man. We're on fire here.
Okay, but we got to figure this out. You bought a lot of stock. You bought stock personally, which was not easy because you had to cancel a program. You came in very aggressively. You are now beneath where you bought that stock. And my question is, what are people missing about ServiceNow that they used to know about ServiceNow?
Yeah, it's a really good question, Jim. You know, we're a $600 billion TAM company, so the total addressable market is massive. The RPO growth of the company, meaning the revenue and the obligations remaining with the company, are growing at 23.5%. It's amazing, and we're over $28 billion now in RPO, and our AI business, which is what it's really all about, I'm having to now put a new guide out there on the AI for this year. We're blowing past the billion. We're going to up it $1.5 billion, and that probably won't be enough. The bottom line is this, Jim. The more AI that happens, whether it's a hyperscaler, these fantastic language model companies, or even the systems of record that are even getting the AI memo, everything runs through ServiceNow. So ServiceNow is the rules and the rails of every major corporation in the world. And so as AI takes off, it's a tailwind for ServiceNow. And the capital markets have been talking about terminal value in terms of not knowing where that exists for software as a service companies, which first of all is ridiculous for scale ones like us. But I think we're answering that question decisively. Our business is doing great. and it's all about AI, and we agree, and we're not scared.
Right, but
the language models are actually great
I don't
for
want
us.
Bill McDermott scared. That would worry me myself. Now, I'm thinking maybe it's the problem is the operating margin guidance of 31.5 below the 32% and lowered from the previous guidance. Could that be it? Could that be what people are looking at is saying that AI is good, but you know what? It does lower their margin performance.
No, actually, Jim, it's good news because we closed MoveWorks, Veza, and now Armis. Okay. So the half a point on headwind on the margin is only because we just took Armis into the company. It was actually supposed to be a point. The efficiency already took it to a half a point. And then in the next 3 or 4 months, that'll be right back on track with the acceleration of our operating margins and our free cash flow. So you're talking about a company here, ServiceNow, that is going to be operating at the rule of 60 very soon between our revenue growth and our free cash flow margin. And what I think is most important for your viewers and great investors, because you attract the best, Jim.
Thank you.
Is that this is one of the few stories in the entire world where you could have a company talking about operating at the rule of 60, a growth like this, which is unbelievable, and a total AI leader, and one that all the other AIs have to run through, including the language models.
So this is a company operating at a rule of 60, growing profitability, and that every major AI company relies heavily on. What's not to like about this? But guys, what do you think? Is $90 a good buying opportunity for a company that the entire AI market relies on? Let me know in the comments and have a blessed day.